Ministers from OPEC and non-OPEC countries, which are the oil-producing countries and non-oil-producing countries, they'll be meeting today in Vienna in Austria for crucial talks, and markets remain uncertain over the outcome. But the most likely baseline scenario expected to emerge is that the group would agree to cut output by 1 to 1.4 million barrels per day. What does that mean to you, and how is this impacting us? All these questions will be put forward to our guest today. Mr. Arun is joining us in the studio. Now, Mr. Arun, now we all know that in October we were talking levels of $100 a barrel, which is a likely scenario, but the oil prices are down up to $61.86. What just happened there? If you could elaborate and explain it to our normal consumers and listeners who would want to make sense of this.
Well, for starters, that's how oil markets are.
Yes, that's how it works.
They're highly volatile.
Yeah.
And in fact, prices have declined by about 30% from their highs.
Yeah.
That's what makes the OPEC meet today very crucial and very important for the oil markets.
Yes.
So what has happened right now is that global oil production right now is standing at about 99.76 million barrels per day, whereas the demand is only about 98.76 barrels. So there's a surplus of about 1 million barrels per day.
Yep.
So the bare minimum expectation from the OPEC meet is a production cut of at least 1 million barrels.
Now, obviously, for the general understanding and consensus is that if you bring the prices down, if you bring the output down, the prices will go up, and the oil-producing countries want that to happen, surely, because that is affecting their monetary budgets. But for a lot of countries, there's been some kind of a pressure from international global superpowers to say that we need the oil prices lower.
Exactly, and that pressure actually comes from American President Trump through his tweets.
Through his tweets.
In fact, it's like Twitter diplomacy.
Yeah.
Trump actually threatened the oil producers that he doesn't want the cartel to increase the prices or reduce the output. So it's like a cat and mouse game right now happening between OPEC and Trump.
So now let's talk about how significant this meeting is, because it is happening in Vienna today, Anna, and we're expecting to see a global cut in output and global output. But what do you think will be the key talking points?
Now, there is an internal disagreement inside OPEC itself. Russia does not want to cut its output by more than 125,000 barrels or 150,000 barrels. Whereas Saudi Arabia wants Russia to cut its output by at least 250,000 to 300,000 barrels per day. Now, from Russia's perspective, they want Saudi Arabia to do more of the heavy lifting, but Saudi Arabia wants the burden to be shared equally among all the members. So whether they'll be able to reach an agreement remains a key issue. And if the production cut is not more than 1 million barrels per day, I think the markets will take it negatively.
Yeah. So what are we seeing in the lead up to the meeting that we've seen? The markets are remaining uncertain. There's been a dip in prices by about 2.1%, some people say. Brent crude futures were down 22 cents on the day at $61.86. So why does that happen as well?
In fact, prices have declined by about 5% from the highs from yesterday. So markets also not taking the meeting very positively. Like they don't expect a very positive outcome. That's what I feel. As according to projections, in 2019, the non-OPEC supply is expected to increase by about 2.3 million barrels per day, whereas the global oil demand is expected to increase by only 1.3 million barrels per day. So going into 2019, the surplus is only expected to increase. So unless OPEC does a production cut of at least 1.4 million barrels, I think markets will not take it positively.
So who do you think will be the biggest contributor to this decline? Because at the event in the nation's capital, and we had an energy minister from Saudi Arabia who said about 500,000 to 1 million is what they want to do, a cut from the output. So do you think Saudi Arabia will be the biggest cutter and reducer in production?
Saudi Arabia has to, in fact, in most of the meetings, Saudi Arabia has done most of the heavy lifting, primarily because they are the biggest swing producer, or they have the largest spare production capacity in the globe. So Saudi Arabia has to contribute more. In Russia, private oil companies, they pressure their government. They don't want to reduce their output by big amount. So Russia is not expected to be a big contributor. Saudi Arabia has to do more heavy lifting.
Sure.
Stay with us here on the Morning Majlis. More when we return, along with great covers.
This is Pulse 95. You're listening to the Morning Majlis podcast.
Join the conversation with the Morning Majlis. Pulse 95.
Yes, you can join the conversation with the Morning Majlis. 4215 at Tissalat and 2022 if you are a Do subscriber. We're talking oil. We're talking what is happening with the changes in prices of oil. And Mr. Arun has mentioned to us that it is all due to market demand, and it is just how oil market works. But now a key fact and a key figure that I've found, Anna, 2.85 billion barrels per day are being stored.
That's incredible.
That is a huge, huge number of storing oil, isn't it? Yeah. And that's being stored by OECD countries. And that's impacted the market, hasn't it?
Exactly. In fact, the number has moved above the 5-year average for the first time in last 3 to 4 years. Now, even the US oil inventories, they have moved above the 5-year average. The primary reason being, or the primary variable being, the US oil production.
Yes.
In fact, for the last 2 months, US is the world's largest oil producer. They have overtaken even Russia.
Okay.
So, US oil producer, the shale oil production, they are just racing ahead at this point of time. We expect the US oil production to rise further into 2019, and that will be putting further pressure on OPEC as well as the oil market prices.
And so moving away then from these countries that produce the oil, for a country like mine of New Zealand, or Pakistan as well for you, Abdul Karim, what does that mean for oil importers?
Well, happy days for the consumers. In fact, it's a really good time to be an Indian consumer. India imports about 1.5 billion barrels of oil 1 year. Now the oil prices have declined by about $20 per barrel from their highs, and India saves about $30 billion in one single year. In fact, this has had implications on the Indian rupee as well. If you have noticed, Indian rupee has actually rallied against the US dollar, and UAE dirham Indian rupee rate has actually come down from 20.20, 20.30 to about 19.10 recently. Not a good time to be an expatriate, but certainly good for countries, consuming countries like India, Pakistan, New Zealand, major consumers.
Major consumers, surely. Now, before we wrap things up over here, I just want to get a vague idea. Where do you think oil prices will level out moving into 2 months ahead? Where do you think would be the average?
I believe oil prices will be range bound between 45 to WTI. WTI crude will be range bound from 45 to 55, and Brent crude from 55 to 66 range.
That was the norm. This after the cuts as well.
After the cuts as well.
Yeah.
And after the first quarter of 2019, particularly after April, May, sanctions on a major country might remove another 1 million barrels of crude from the market. So into the second quarter of 2019, we expect oil prices to pick up.
Okay.
So until then, range bound.
Well, that's the range that we can see. So, Mr. Arun, thank you for joining us right here. So that gives us more of an explanation of what to expect in the OPEC meetings that is taking place today in Vienna.